Good morning. I'm David Sapir, and it's great to have you here. I'm starting a little bit late. I won't explain why. If you're here recorded, I'm not late. I'm exactly on time. So welcome. If you're listening to the recording, if you're watching live, hey, sorry about that. But we're now, and the topic today is super important. What's the topic of the day? It is cash flow advisory and profit advisory. Is it really that hard? I'll be talking about that, but first, our sponsor is Pivot, the Unconventional Cash Flow Conference. It's happening in May of 2026. If you've ever wanted to learn about cash flow advisory and learn about how to really take on and fix a company using cash flow, it's going to be compressed into a 4-day conference, and it's not ready to launch yet. But if you're interested, leave me a message, send me a direct message, send me an email, and we'll make sure you get information about it. Let's jump into the topic today. Is cash flow advisory and profit advisory that hard? The answer is it might be, depending on who you are and what your skill set is. And there are two parts of advisory work. One is what I would call the hard skills. And in this case, that would be modeling, the technical skills. Those are hard skills. Modeling and managing cash flow. Modeling, I need to explain. That is creating a cash flow model that predicts future cash flows. Managing is learning how to move money around, expenses in. When you're having difficulties, you move expenses in. You push expenses out, you delay payments, delay expenses if you can, and you try to bring in revenue and bring in cash into your bank account, not the revenue that shows up on a piece of paper using accrual accounting, but actual deposits into your bank account. You try to accelerate those. That's when you're in trouble. Now, when you're not in trouble, you get more creative and you might be able to push out expenses or push out revenue and pull in expenses and actually increase your long-term cash flow. That's a topic for another day of doing the opposite to make even more money. Today, we're simply talking about, is it really that hard? Now, that was actually an example of what is harder is the soft skills, which is mindset and mentoring. And then maximizing is a combination of mindset with technical skills. So we'll get to that last. So we're going to dig into each one. Why are technical skills easy? The modeling and the managing. Modeling, people will come to me and say, David, I want to be the best cash flow modeler in the whole world. I say, great, let's go do it. And I teach them all about the intricacies of doing predictive cash flow models and what the pitfalls are. The biggie that's the most difficult one is predicting the cash deposits and how much cash is coming in when. But that's the same thing for everybody, which is a sales forecast. But there's really good tips and tricks depending on your type of business of how to get that. And you learn from the past as you go forward, you'll get more and more accurate to where your next couple of weeks can be extremely accurate within 1 to 5% on an ongoing basis. And then further out, it gets less and less accurate, but you get more and more comfortable with the inaccuracy. So the technical skills of creating this cash flow model that predicts your future cash flow balance is relatively easy to do. Not huge concepts. You use addition, subtraction, and a calendar. Today's balance, and at the end of the week, what will your balance be? Because you added money, you subtracted money. There's your ending balance that you're predicting for the end of this week, which becomes your beginning balance at the next week. And you just repeat each week, and you go out. 13 weeks is typical, and I've gone out a year. I've gone out as far as 5 years, which is another technical skill of how long do you need to go out, but that's relatively easy to learn. Just start with 13 weeks. The rest, you just copy and paste some more columns at the end. All right, that's skill number one. Skill number two is managing, and that's moving money in or money out. When you're in cash flow difficulties, the typical is you are trying to push as many of your expenses out as possible, maybe as far as possible, and then pulling your revenue in and your cash in. Again, there's techniques. They're relatively cookie cutter on how you do this, how you interact with clients, how you interact with vendors, and et cetera, et cetera. Okay, so that's relatively easy. What's so hard? The hard part is the soft skills. And with cash flow and profitability advisory, it is mentoring and it is mindset. Let's start with mindset. If you're on LinkedIn and you saw this, then you might have seen my little light bulb illustration of a face pointing towards the past and a face pointing towards the future. It creates a light bulb. The light bulb is because all sorts of ideas go off when you start talking about these concepts of what needs to be done to help a company improve their cash flow and improve their profitability. Mindset number one, and this is the tough one for accountants and bookkeepers, anybody who's had formal training in school for what's called GAAP accounting, generally accepted accounting principle accounting. You need to unlearn that, or not unlearn it. You still want to remember it. You need to understand there's other ways of looking at numbers. That's number one. Number two is that GAAP reports, P&L reports especially, do not reflect reality. Profit is not cash in the bank. Now you might say, oh, David, I know that. Well, great. Do you explain that to clients? And more importantly, do your clients understand it? Why the clients? Because the world says there's two really critical things that a company needs to look at. Number one is revenue. And by the way, you know that all revenue is good revenue, right? That's another mindset that has to be blown up and explain that no, not all revenue is good all the time. Matter of fact, some revenue is bad all the time. What kind of revenue is bad? When you've got a client that you're losing money on a contract, or you're losing money because they come in and only buy loss leaders. They only buy the ones with really low margins. And the other type of client where you can literally lose money, doesn't matter what they're buying, are the ones that are a royal pain in the rear. The ones that are giving you grief, that keep you up at night or keep your staff up at night. If you were to throw in there the extra time, energy, and effort that you're putting in to the profitability equation, you'd probably learn that you are losing money. Huge issue, huge mindset change. Not all revenue is good. The other one is profitability. Have you ever seen a P&L, especially accrual basis, that says somebody made a ton of cash, a ton of money. You made $250,000 on $2 million in sales. Well, that's pretty good. But there's no money in the bank. Well, why not? Too many financial professionals can't explain it. You need to be able to learn how to explain that, number one, but also to be able to help yourself and then others understand, and that's the mentoring part. How do you teach this to other people? Understand that profit is not the most important driver. As a matter of fact, if you could get away with having cash coming in constantly and never making a profit, wouldn't you want to do that? And some people say, no, that's a hobby. You can't do that. The IRS wouldn't allow it. Nope. I'll give you one big example. The real estate industry, the investment real estate industry, is built on positive cash flow and absolutely positively minimizing the profitability of any given property to the point of that you're losing money year after year because of this big chunk of depreciation you get, 28.5 years for residential commercial properties, if I remember correctly, in the United States. And I don't know what other types of properties are, but, and then you can accelerate your depreciation. So you're taking bigger amounts of depreciation faster, all in the name of reducing or eliminating completely profitability from that building. And you can do this for year after year after year. That's one of the reasons that wealthy people get wealthier, is because they invest in real estate. It's not the only way, but it's why real estate's such an attractive investment. So profit, most companies, yeah, you need a profit eventually, but it's not the most important thing. What is? It's getting cash into the bank and always having enough cash in the bank and never having to worry about going below zero. And yet there is no good accounting system. Accounting reports, there's no good accounting reports for saying this is what's happening with your cash. And yeah, there's the statement of cash flows. It's terrible. It's confusing. I have to relearn it every single time. And anybody who's honest about it says, yeah, it's not a really good report. I know somebody who was on the International Standards Board, and they said, yeah, it's a real problem. We can't figure out anything better to do, especially for small business people. Well, I'll go back to our technical skill, a predictive 13-week cash flow model. If you want to put the cash flow historical, keep track of it. You can do it. It's pretty easy to do. That would give you reports that we learn the first time we open up a savings or a checking account at the bank. Let's use a checking account as an example because there's more frequent transactions. You've got a beginning balance, you put money in, you take money out, you end up with an ending balance over any given time period. That's all these cash flow projection models are. That's what's important, is how much cash is in the bank. You need to unlearn that, and there's so many other things to unlearn. And let's move on to mentoring. What is mentoring? Mentoring is teaching other people these same skills. And I'll start off with mindset. Mindset for a client comes with the interview process. When you're trying to see if you've got a good fit, can you help them or not? You should be asking way different questions. You should be asking open-ended questions. When you're looking at bookkeeping, accounting, tax, so often those are closed-ended questions. Do you do accrual or cash basis? Maybe having a discussion about which one is better, but it's basically there's two answers. It's a binary decision that has to be made. What other questions would you talk about? How much revenue did you make last year? Okay, again, there's a small amount of subjectivity, but there's a definitive answer. When it comes to cash flow and advisory work, there is not always a single answer. Matter of fact, most of the time, we ask open-ended questions, and we don't draw any conclusions unless we investigate and find evidence. This is one of the biggest things that new advisors have a hard time with. They want to give the answers because with accounting, and most of the people I work with come out of accounting, bookkeeping, tax, or some other related specialty field, such as inventory management. Some come out of the finance background. They have an easier time because they're used to projecting the future, and they know they cannot accurately project the future, so they give qualified answers. But let's get back to this interview process, and it is too easy to make assumptions. For example, going back to the client that I had, where revenue is flat and the profit was going down. And you could look at a whole bunch of different things. And I could have said at the opening meeting, I could have said, well, you probably have too much expenses. That's where 99% of the people I work with automatically go, you've got an expense problem. Well, 1 inch deeper, and you realize it's not an expense, it's that their margins were going down, but you need to do analysis. And usually we get one cash flow, we get one P&L, and we get one balance sheet. You cannot see this in one, if something's going up or down, up or down, I did it the opposite way. You can't tell that from one. You need to look over time what's happening. So by making that kind of a statement in a client meeting and saying, yeah, it's probably you've got an expense issue, let's look at that, you're giving false information and false hope that they can solve a problem through expense management. And there's some other systems out there. It's one of the issues I've got with some of the fairly well-known profitability systems, that it's always an expense issue. Well, I don't agree. It's not always an expense issue. That's a day for a different show. What we're talking about now is mindset. So a key mindset for an advisor is you can't just give away the information. 2 reasons. Number one, the perception is you've already solved their problem. Oh, it's an expense issue, is great. I don't have to work with you. I've just solved my expenses. I'll go fire some people. I don't know. There's different ways to think of expenses. That's terrible. They'll never fix themselves. But the other reason why is because you do not know until you test it what the real problem is. And by testing, I mean dig into the numbers. And you finally see, oh, look, our margins are going down. Now, that's a symptom. And this is another mindset issue. You're not trying to fix symptoms. Too many times a client comes to you and they're talking about symptoms. I don't have money in the bank. Well, that's a symptom. Why not? It's always why, 3 to 7 levels deep. And there's a methodology. You got to get 7 whys before you find root causes. I find that it's more like 3 to 4. But why? Why are the margins so low? Well, our product mix, that was another issue that they had, is the product mix and the pricing was way off. I won't get into that now, but it was 2 or 3 major reasons that revenue was flat and profit was going down, cash was disappearing in this particular company. Purchasing was another issue of the way they were sourcing some of their products. So mindset, much more difficult. So is learning advisory easy or hard? The answer is yes. It is both. The hard skills that you need to learn are fairly easy to do, especially if you've graduated from any kind of a university program that math was involved. I don't care what kind of a program it was. These are really relatively easy concepts. The mindset is very difficult. And that's quite frankly where most of the people that I work with give me feedback, say they just never realized how much mindset they had to change and work with and work on. Now, let me touch on 2 other topics, and then we're going to wrap up in a couple minutes. Number 1 is the challenge of learning, and the number 2 is this maximization issue. Maximization of cash flow and profitability is challenging because quite often those are advanced strategies that nobody talks about. That's number 1. Number 2, very often they're opposite strategies of what the world tells us you should do to increase your cash flow. I'll give you just one example of an opposite. Let's see, which one do I take? I will take on collect your money as quickly as possible. Completely counterintuitive. Why would you want to do that? If you're looking to increase cash flow in the short term, absolutely, positively do that. However, if you want to increase cash flow in the long term and profitability in the long term, and you have enough cash and you have a risk tolerance either reliable enough clients or just you're a gambler. I don't want to say that one. I'm not a gambler. You can do this relatively safely. You offer to your clients terms. You become the bank. You say, it's $1,000, but if you'd like to, instead of paying me in 1 month, you can pay me $275 a month for the next 4 months. What's the math on that? That means instead of getting $1,000, you'll get $1,100. That's 10% more in 4 months. Well, what is that on an annualized basis? On an annualized basis, that is 30% interest on your money. Wow, that's a lot of interest. And imagine if it wasn't an extra $25 a month, it was an extra $50 a month. That a client might say, yep, I'll gladly pay you $300 a month over 4 months instead of $1,000 this month. Well, then that's $200 more, or 20% more in 4 months. That's 60% equivalent in interest. That's a great strategy. Again, if you can afford it, but there's lots of companies who can. Generally, you've got high margin products that, and oftentimes that first payment, you say, yep, you got to pay me the first $300 today, covers your entire costs, and everything else is additional cash flow, additional profit. So that is a great one. That is an opposite strategy that allows you to maximize, but there's a mindset that has to change, and you've got to be willing to go against the flow. And it's a little bit more technical because you have to implement the systems to collect the money, right? So there's a whole bunch of moving parts, but there's ways to get around that. And quite frankly, the collection part these days is pretty easy on automatic payments, etc. So that was number one. I was just mentioning maximization is technical and mindset. Number two, what is the hard part about actually learning? And that is implementing. The theory behind everything I've talked about today is easy to absorb, easy to understand. But when you get in front of a client, sometimes, and this is what I've been told, is like deer in a headlight. Matter of fact, my first client, and I've got a lot of clients with things, I won't go into why, but I've been very fortunate that I've been thrown into really tough situations and I've been able to work them out. So I have a lot of confidence that I can work out situations. But my first consulting cash flow profitability client was the client who handed me a piece of paper and said, hey, David, here you go. My accountant told me I made $250,000 last year on $2 million in sales. That was a real story. I had no idea of how to fix this. And I just said, well, what did your accountant say? He doesn't know how to explain it. Like, okay, give me a little while. I got to take a look at your numbers and I'll figure this out. And I'm just going, how am I going to figure this out? And I was nervous. I was scared. I won't get into exact details, but it did. It took me overnight. I figured out a couple of things, and that was a big thing. And then I figured out a lot of other things going on. But my point is this: if you've never done that kind of work, and I've done that type of work in large corporations for a division that I was responsible for, and I was able to shrink it down into a smaller organization. But if you've never done that before, that all you've done is historic, that can be really difficult to take the theory and put it into application. I was just talking to Robin. She's one of the women in our program yesterday. And I said, was it hard? She graduated with an advanced cash flow certification. So was it easy? Was it hard? Tell me about it. And she said the hardest thing was being uncomfortable when we were in case studies. And you say, how do you do this? And it wasn't trick questions, wasn't difficult. And she said it was just hard to really figure out, going from the theory to how do you actually implement it. And she didn't tell me this yesterday, but she's told me dealing with clients those first few times of learning a concept that she's had to again go teach a client has been really tough. But then all of a sudden her client has that breakthrough aha moment, and that she's able to internalize what we've learned in class. And then she says, okay, I can do this now. It might take time with any given client, etc. All right, we've covered a lot of material, and I hope that you learned something from this. There's my ebook down right there that you can go get my ebook. Please, it's a pleasure to share with you, and that's 24 strategies and the details of how to implement different strategies that will make you positive cash flow and that you control. And it explains why those two things are so important. I am doing this every single week. I'm going to teach everything I know. This fall, I am re-recording all my coursework, and I will be teaching it here. And I'm putting that together into coursework. Might not be in order because I've got certain things I've got to do, and it might not have it won't have the continuity and flow, but you can learn everything. I'm going to give you everything for free right here during LinkedIn Lives. This is going to be on Wednesday morning, 7 o'clock Eastern time. This morning we started late because I forgot to push the go live button after the countdown timer. I thought it did it automatically, but it will get better and better, and you will learn more and more every single day. Go to my website, go to my blog. You can learn, and I appreciate you for being here. The reason I do this is to keep more companies in business. So if you're a business owner, God bless you. It is not an easy route. If you are an advisor and you want to help small businesses, you can do it. We need advisors who really can go in and help businesses. Too many are failing because of cash flow issues, even though their financial statement is telling them they're profitable. So let's bridge the gap and make sure we're working with cash, because cash is clear.